Hey, hi, this is Kribakar and Rajendran. So, welcome to another video series with Groww. So, we have been doing a regular video series with Groww, educating users about rule-based trading specifically. So, in this video, we are going to talk about FINNIFTY option trading system. So, I'm going to explain about a specific option trading system which you can use it on expiry days specifically for FINNIFTY. So, as you know that most of us trade on expiry days with respect to Nifty and Bank Nifty on Thursdays. So if we have a specific trading system which could take care of Tuesdays, that is for FINNIFTY expiry, then it would be really useful for most of the option traders. So let me tell you why FINNIFTY needs a totally different approach compared to Nifty and Bank Nifty is FINNIFTY is relatively new, a newer index which started gaining traction recently, but the volatility is extremely high with respect to FINNIFTY. So most of the option traders, the issues that they face with respect to FINNIFTY is no matter where we keep the stop loss, it's going to get hit. So, and still end of the day, if you see, most of the option expire worthless with respect to FINNIFTY. So I did a data analysis to find what is the usual range where with respect to FINNIFTY moving. As I could see, the maximum movement that FINNIFTY has observed in the in the last 1.5 years is between -3% to +3%. That was the extreme case. So the worst case scenario is -3% to +3%. But however, more than 90% of the time, this FINNIFTY stayed in a very tight range, specifically on Tuesdays. Even though it could see a volatile move, there could be at times where it could see trending move as well. But most of the time, we could see that it keeps oscillating on the upside and downside, but eventually it stays in a tight range. So we need to derive a specific trading system which could know, and specifically an option selling system that could make use of this tight range move. So if we use a fixed stop loss mechanism, just like most of the option traders use a 920 system or a 920 straddle variation with respect to Nifty and Bank Nifty. But if you apply a same system, what you're trading with Nifty or Bank Nifty, if you apply that with FINNIFTY, it would definitely not work. I have tried backtesting various parameters, but then I finally found that there is one specific an option trading system that could really help, where I have backtested it, and let me tell you what are the rules of it and how the system has performed in the recent past, like in the last 1 year. On every expiry, I'll tell you how it has performed and what is the risk involved in it and what is the overall returns and everything. I'll explain you in this video. So let me explain what is the trading rules behind this option selling strategy for FINNIFTY. So the rules is every Tuesday, that is on every expiry of FINNIFTY, we will be shorting in the money options, both call option and put option, at 9:20 a.m. and then we will square it off by 3:20 in the evening. But instead of using a fixed stop loss on the premium, we will use a stop loss on the underlying, which is on FINNIFTY index itself. So consider we initiated trade at 9:20 and then we short both in the money call option and in the money put option, and say suppose if FINNIFTY is trading at 20,000 level, then when FINNIFTY moves 0.4% on the upside or 0.4% on the downside, then we will exit this rolling straddle, this in the money straddle, and then we'll initiate a new straddle. So this is the concept. So basically what we are going to do is, instead of shorting an at the money option straddle, we are shorting in the money short straddle system here, and then we don't use a fixed stop loss. Instead we use a stop loss based on the underlying. So when the FINNIFTY moves 0.4% on the upside or 0.4% on the downside from our entry level, then we will close this straddle position, both call option and put option, and initiate a new in the money straddle. So this is the overall process, overall rules. So let's consider this example. So consider FINNIFTY, we are trading on expiry day. So around 9:20 we are checking what is the level, where FINNIFTY is currently trading. So consider FINNIFTY is trading at around 19,000 levels. So as per our rules, we have to short in the money call option and in the money put option. So for 19,000 level, in the money call option is 18,900 and in the money put option is 19,100. So we will be shorting these two strikes. So once we shorted these two strikes, we don't use a stop loss based on the underlying, we don't use stop loss based on the premiums. Instead we'll use stop loss based on the underlying. So the underlying is the FINNIFTY index. So when FINNIFTY moves 0.4% on the upside or 0.4% on the downside, then we will close this in the money short straddle which we created. Instead of that, then we will create a new straddle. So for an example, consider after we enter at 920, after we enter the in the money call option and put option trade, consider 0.4% of FINNIFTY, which is 76 points. So when FINNIFTY moves greater than 19,076, or FINNIFTY moves down minus 76 points, which is 18,924. So when it goes above this level or when it goes below this level, then we will close our current position, our current in the money call option and put option short position. We'll close it and we'll initiate a new straddle. So we will initiate a new in the money straddle. So again we will check what is call and what is put at that point of time. So currently, after the stop loss hit on the underlying, if Nifty is at this level, which is 19,076 level, then find out what is the in the money call option and in the money put option. So as per this level, in the money call option will be 19,000 and in the money put option will be 19,200. So you will be shorting these two strikes. Similarly, if Nifty moves down, then again the in the money call option and in the money put option would vary. Accordingly, we will short both these strikes. So likewise, based on the underlying moves of 0.4% on either side, whenever it moves, we are closing both the legs and initiating a new in the money short position on both call and put. So when I try to backtest these rules using a backtesting platform called Bcaktested, this is the overall results that I get from January 2022 to till date December. This is the overall P&L. So it has generated almost around 1,17,466 as overall profits, with the average day P&L of 2,700 rupees approximately, and max profit is approximately around 21,000, and max loss is really good, where the maximum loss itself is only 1,300 rupees, and the winning accuracy is almost more than 80%, with only 15 less than 16% of losing ratio, and the max winning streak, that is back to back, it has made 18 expiries back to back profitable. Only 2 expiries it was in loss, and overall the expectancy is really good, where 4.53 is the expectancy and the maximum drawdown is around 2,000 rupees. Even if we consider double the time, it's still less than 5,000 rupees is the maximum drawdown. So this is the monthly P&L of the overall system. So as you could see, from 2020 to January to till date, it has made very good profits. Only few months or few expiries that it did not make profits, but most of the expiries it ended up in really good profits. Usually the option premium usually will shoot up during the budget announcement. So that is why you could see February, March, those periods it made higher profits, because obviously the premium would have been much higher during this period. So it made huge returns on those 2 months, and the rest of the months the premiums were completely stagnant and it did not deviate much. So as you could see, the overall returns of the strategy is really good, and this is the overall. One thing that we need to observe is this is not live results. This is actually a backtest results based on a third-party backtesting tools which we use to test the FINNIFTY strategy. So overall, the things that we need to keep in mind when we are trading with FINNIFTY is, FINNIFTY is highly volatile than the other two instruments. And second thing is, using a fixed stop loss on the premium might hit the stop loss and still the market move in our direction and we might miss out the profits. So that is why instead of using a fixed stop loss on premium, we are using a stop loss based on the underlying. So as I explained in the example, based on the market movement, based on the FINNIFTY movement, we will close the position when the underlying moves greater than 0.4% on either side. So when that moves, we will close this in the money short option with respect to call and put and create a new in the money short options with both call and put, and we keep rolling this straddle as the FINNIFTY moves on either side. So what we have observed is, more than 85% of the time the maximum number of re-entries that it triggered is 6 to 7 re-entries. Very rarely it created more re-entries when when FINNIFTY moves in single sided direction. So at the maximum we have seen only one time that it triggered almost 18 entries, and that happened in the month of February during the expiry time, and rest of the time it did not trigger much entries. Mostly the maximum entries has been 6 to 7 entries is the maximum entries we have seen. So if you are trading this FINNIFTY option trading system, try testing it out with 1 or 2 lots initially and see if you are comfortable with, and then slowly gradually increase it, because since we are now going to deal with in the money option, there could be slippages which could eat away overall your profits. So make sure that you have a robust execution mechanism. You have to be really fast, otherwise you could create your own system and try to execute it by yourself. So with respect to this strategy, this is what I wanted to convey. So in case if you guys have any questions with respect to the overall strategy rules, please post in the comment section. I'll address it. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.